Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus Canada. Today's date is April 29, 2024. In this video, I'm going to take a look at the technicals that are driving this currency pair and try to make sense of the charts from the price action. So let's get started. I'm looking at the hourly chart, and technical analysis about visuals, and what we see is in the visual on this hourly chart is that on Friday, in between these two dashed lines, the low price came in at 136.32. Now, that level didn't really have anything to do with any sort of technical levels. It was above the 61.8% retracement. It was above the 200 bar moving average on the 4-hour chart. That's the green line right here. It was above the swing area down through here, where we had a number of different swing highs forming a ceiling. Broke above it here, failed, and then reestablished the level right through here. But you can see the ceiling being developed through this area right through here. So all those were key levels on the downside, but as you can see, the price fell woefully short of that level and then bounced back to the upside in trading here today. However, the price moved back down to that level, and this time we had a technical reason. That was a low from Friday for buyers to lean against that level, and indeed they did, and the pushed the price back higher. Now that move to the upside did initially find resistance against a 50% retracement level. That's this high right here. And then after a brief little corrective move to the downside, pushed back higher and went to the next target level, which is the 100-hour moving average. That's the blue line of the chart at 1.36718. As you can see, we're currently trading right around the 50% retracement level. I'll get that out of the way. Let's see right through there. And below the 100-hour moving average, right at the 50% retracement. So we're kind of at a neutral level for this currency pair. And going forward, from a technical perspective, from a price action perspective, what we would need is a move above that 100-hour moving average to increase the bullish bias, in which case we'd start to look toward the 100-bar moving average on the 4-hour chart and the 200-hour moving average, along with broken 38.2, this cluster of resistance, starting with 136.94 and ending at 137. What is that? 10 for the 200-hour moving average, just moving to the downside. So that would be the target on a break of the 100-bar moving average or 100-hour moving average. Conversely, sellers who like to put a lid on the dollar versus Canada, maybe see a lower U.S. dollar, higher Canadian dollar. What would you want to see? Well, you want to see the price move back below this swing area down at 156.54, and then ultimately get below the 61.8 to 200 bar moving averages swing area down through here to push the price further to the downside with the 200-day moving average all the way down at 135.418. So right now we're kind of at, when you're at the 50% retracement, it's sort of a neutral area technically. 50% of the price action is above, 50% of the price action is below. That goes back to the beginning of April. So, it's the buyers and sellers are happy, or should be happy, or at least sitting on edge waiting for the next shove. And that's what I'm focused on in this report. It's looking for the next shove. Is the shove going to come above the 100-hour moving average? Is the shove going to come below the 50%, below the swing area? That's what you're looking for from a technical perspective. So there you have it. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.